the cartel bullion banks have been holding back the price of silver for a very long time. In fact, 4 or 5 commercial banks holding the largest concentrated short position in any commodity traded on COMEX. It's in silver. But as the price has been rising, the losses on these commercial banks' balance sheet has to be extraordinary and borderline unbearable at some point. I do believe that this trend of acceleration in events and in chaos and in newsworthy things to talk about will only increase. We've said that since the beginning of the year. At the beginning of the year, we were told 200 BRICS meetings. Well, today, they're having a big BRICS meeting related to finance. I think the actual title of it is the BRICS Deputy Finance Ministers and Central Bank Governors. They're meeting today. I wonder what that's all about. Could it be discussing their commodity-backed currency? Who knows? But
in the shadowy corners of commodity trading, the silver market is whispering of an upheaval. Andy Schectman, president of Miles Franklin, paints a vivid picture of what he terms a silver squeeze, a scenario that could ignite unprecedented increases in silver prices. According to Schectman, a combination of factors including disruptions in silver delivery, structural failures in ETFs, and the urgent covering of naked short positions by large financial institutions could conspire to drive silver prices sky high. This potential volatility offers what Schectman believes to be a generational investment opportunity, a chance for savvy investors to capitalize on these market anomalies before they correct themselves. Amid this backdrop of predicted market turbulence, these offerings, Schectman suggests, provide not just value, but a hedge against the financial instability he forecasts. It's an invitation to investors to diversify their portfolios at a time when the physical backing of assets becomes increasingly critical. However, the silver market's peculiar dynamics extend beyond simple supply and demand. Schectman delves into the murkier aspects of commodity trading, highlighting vast discrepancies between reported silver reserves and actual trading volumes. Such inconsistencies point to potential market manipulation, where paper silver, contracts, and shares representing silver far exceeds the physical silver available for delivery. This manipulation helps suppress prices and creates a fragile foundation that could shatter under the strain of real demand for physical silver. The scenario described echoes historical precedents where market manipulations have eventually led to severe corrections and crises. Now we'll show you the best clips of the latest interview. Smash the subscribe button and turn on notifications so you do not miss out our daily recaps with the most sought-after commodities experts. Enjoy the episode.
28th, silver closed at $36.01 on the Shanghai Gold Exchange. They can't hold this down anymore. They can't. And when you see open bids in Shanghai for $36 silver, I think it's just the beginning. But let me try and put all this together. So it appears as though we have the makings of what could be a giant silver squeeze. And I would also argue, it appears to me, Zoltan Pozsar was dead on. I think in 2020, he called the Bretton Woods 3.0, Number one, when we took over from the pound sterling. Number two, with the petrodollar in 73. And now number three, the system that will be all about commodities and transparency. And it's as if the commodities are becoming more valuable than money. And let's call it currency, not money, more valuable than currency. There's an old saying, he who has the gold makes the rules, but you could go even further and say he who has the gold, the silver, the rare earth metals, the copper, all of the commodities, hard and soft, make the rules. And when you think about China accumulating the London Metals Exchange, when you think about China striking deals for natural resources all around the globe, when you think about including food, wheat, corn, soybean, you name it. When you talk about the BRICS nations in general being commodity rich, this begins to make great sense. And it seems to me that the gold and silver markets are literally playing by a new set of rules that I've never seen before in my time 34 years in this industry, the resiliency of the market is astounding to me. These are things that never have happened before. And I think especially silver. And when you look at the COMEX numbers and you can see that these bullion banks, the cartel bullion banks, have been holding back the price of silver for a very long time. In fact, 4 or 5 commercial banks holding the largest concentrated short position in any commodity traded on COMEX. It's in silver. But as the price has been rising, the losses on these commercial banks' balance sheet has to be extraordinary and borderline unbearable at some point. And they're going to be forced to cover the paper shorts. And I think that's something that, we've always just taken for granted. People will say, well, they can just keep doing this forever. You can in an environment where the demand for those commodities is non-existent, but you can only manipulate a market over an extended period of time by pushing it in the direction that it is truly going. And the trust in the United States and the Western system has been extraordinary for a very long time, but it's as if the glass has been broken, and putting back that glass is akin to putting back the trust that has been shattered, at least across the entire Southern Hemisphere, if not most of the globe.
In today's news recap, the booming silver demand may lead to extreme price action, TD strategist says. Silver is the latest mine material to experience an uptick in global demand thanks to its uses in electronics and clean energy technologies. And a commodities expert predicts the price of the metal will continue to climb. I think that silver is probably the most exciting trade in the energy transition theme within the commodities complex today. Daniel Gali, a senior commodity strategist with TD Securities, told Bloomberg in a Tuesday interview, "What we're talking about here is a market that has been in a universally recognized structural deficit, essentially driven by the boom in solar capacity across the world and the growing trend of electronics being embedded in everything that we do, but particularly so in vehicles." The price of silver was hovering just shy of $32 an ounce in Tuesday afternoon trading, the highest price on record aside from brief spikes in the early 2010s and late 1970s. Gali said the recent bullish run is due to a historical lack of investment in silver-specific mines, which has led to supply worries in the industry as demand continues to boom. Silver is primarily mined as a byproduct of lead and zinc mines, of copper mines, and of gold mines. So there are very few companies that mined silver specifically, he said. Gali added that until recently, supply deficit concerns had been tampered by a massive amount of above-ground inventories that could be relied upon to balance gaps in silver markets. But he expects that to change. Now, we'll show you more clips. But first, subscribe and turn on notifications and check our pinned comment for some massive sign-up bonus.
So lately, there's been a lot of talk about the global inventories disappearing in silver. I mean, you look at COMEX, it's been bled dry for years. We've talked about that. You look at the LBMA, it's got the lowest level of inventory, second lowest level of inventory for sure in the 140-year history of the exchange. And now we're beginning to see things on Shanghai disappear. We've seen, and we'll talk about that, we've seen the ETFs be bled dry. Everyone says, well, there's great availability in the retail market. Well, that'll change. It'll change really fast if what I'm seeing is actually happening. The American public has been asleep at the switch. They have been infatuated with NVIDIA and Bitcoin. They've even been infatuated with the 5% return in treasuries with no risk. I understand all of this, but they're missing what could be a generational move in metals and in particular in silver. Now, there was a lot of talk, and Mr. Jensen talked about all of a sudden you have bullion bankers showing up at the Shanghai Metals Exchange. Now, remember, the numbers on the LBMA, we're told there's 800 million ounces of silver there, of which 500 million belong to the ETFs. And when you realize that leaves 300 million ounces, that's about what is left on COMEX in the entire ecosystem in COMEX. About same amount, but in COMEX, there's only about 40 million ounces backing the contracts. The rest of it is eligible and it's not for sale. So who knows what the real numbers are, but they are, 300 million-ish or less globally on the Western system, and probably a lot less backing everything. I'll keep that in mind. But I did some digging myself, and I went right on to the Shanghai Metals Exchange website. And you can see for 4 straight weeks, starting the second week in March, first we had Deutsche Bank, then we had HSBC Bank, then we had JP Morgan, and then Standard Chartered Bank show up one after another for 4 straight weeks. And Jamie Dimon evidently is there right now. And could there be a coincidence with these 4 bankers showing up? And since that first week in March, the Shanghai Metals Exchange have bled down in silver to a new low not seen since 2020. Who knows what deals were struck in the back room at the Shanghai Metal Exchange, but it becomes really interesting when you realize something that I didn't realize until watching Mr. Jensen's interview, and that is that gold cannot be exported out of China without first depositing a bar into the Shanghai Exchange. So then you can export it. So this is contrasting with silver, which can be exported. And it would seem to indicate to me that the banks are there not to talk about gold. It would make no sense. They would have to deposit their own gold first into the vaults in order to export it. It makes no sense. They're there to talk about silver. And it almost speaks to a desperation. Please help us. We're trapped. We have massive short positions that are naked, and I'm going to get into that, but we don't have the silver. Help us. We'll work out a deal. Maybe it's gold related. Who knows? But look, we know that silver imported almost between 5 and 600 million ounces of silver in the last 2.5 years. And again, to put that in reference, COMEX silver inventories are roughly only 40 million ounces of silver, and they're rehypothecated over 1,600%. Right? So 16 people hold the same contract, and it's probably a whole hell of a lot more than that. And we do know that the LBMA inventories are down to their lowest level or second lowest level, debatable, in the 140-year history of the exchange. This becomes even more interesting when you realize this. They have these huge naked short positions, and the inventory levels on both exchanges are at record low levels. You have countries like India importing over between 5 and 600 million ounces. That would be way more than is available in any of these 2 hubs. You can start to see the significance. I think you'll see more in a minute. So it's important to understand that for decades, the price setting mechanism has been determined by the Western institutions like JP Morgan, like Standard Chartered, like HSBC, like Deutsche Bank. And that system seems to be really breaking down now. They're not controlling it anymore. It seems as though this is kind of the drive, maybe quietly in the back rooms of the BRICS nations. Let's beat them at their own game. This is stuff we've been saying on your show, and I've been saying for years on other shows, but largely that gold and silver are replacing traditional forms of savings, right? And the flow of gold from west to east is a real transfer of wealth, and it is really happening. And again, we've been talking about this for a long time, done again. What I find crazy is how the West is underestimating the significance of this. And at least the Western media doesn't speak of it all. Even the talking heads and people who I respect a lot in this industry are not acknowledging this is a game changer as far as I'm concerned.
What do you think of today's show? Is Schectman spot on in his theory that silver will massively boom in 2024 and 2025, or is he wrong and you'll lose your shirt if you buy at these prices? Post in the comment section your honest opinion and watch this video right here because it's a perfect fit for you. I see you on the other side.